My name is Ghela, and I'm really excited to be here with Rebeca and Miguel today to talk about regulation, actually technology as policy, because that is where we're heading. And there have been some interesting developments in regional regulation, last week with the Mexican Fintech law just being passed. But there are also examples in different geographies, like the UK, where I live, and the FCA regulator that I work with. I was just in Singapore last week with the Monetary Authority of Singapore as well, and talking about open banking, API, fintech collaboration. It's a lot to talk about. And I think the first thing we need to talk about is why regulation should actually drive this, and why should regulation take a key position in the market development, especially here in Latin America, specifically here in Colombia, and what lessons can we learn from the experiments that are going on in open banking and other places in the world. But before we kick that off, I would actually like to ask Rebeca and Miguel to share a little bit more about their expertise and their background and give you an idea of why we're talking about this. Rebeca.
Sure. Hi, my name is Rebeca Azaola. I am country manager of Afluenta, as you all know. We are a crowdfunding company. The company starts in Argentina and then launched Peru, and we have been working in Mexico around more than a year now. We have been very active with the government and with the fintech law in Mexico. We participate since pretty much the beginning on all the views of how the government was understanding crowdfunding model in particular. They were really very aware of the importance of all these models and the fintech industry, how quick it's growing, and they know from the past that they need to put attention to it and regulate. I think one of the questions that you ask, why they have other lessons from the past that they were not, I don't say successful, but complicated towards implanting regulated to an industry that was already grown a lot. And they figured that technology, it moves very fast, and they can contribute to financial inclusion and competition towards this regulation.
And we'll be talking about inclusion and competition and the pathway towards that. But Miguel, give us an idea of what you've been looking at and how you operate in the ecosystem.
Sure. My name is Miguel Herrera. I'm a partner at Quona Capital. Quona Capital is a global fintech fund for emerging markets that specializes in fintech for financial inclusion. So, as was just mentioned by Ghela and Rebeca, fintech plays a key role in financial inclusion. So, for us, it touches upon every single company that we diligence for a potential investment. How does their business model interact, or what is the intersection of their business model and the status of the latest regulatory developments, not just in crowdfunding, which is Afluenta's focus, but also on anything and everything from blockchain for remittances, or online lending, or
Micropayments, microloans,
robo-advisors, personal finance managers, neobanks, challenger banks. So for us, it's a key component, and we try and keep abreast of all the trends and developments, and try and influence as much as possible the conversation revolving that.
So the starting point for all this is actually the change in the entire industry, shifting from transactions and money to data, and data being the asset that banks will eventually be custodians of in a real fundamental way. Right now, they're custodians of transactional data, but there's so much more that exists and that FinTech and Open API exchange actually enables to round out things. And data is the new oil. Data is going to be what capital wealth is in the next 5 to 10 years. And even as we look at what Facebook and Cambridge Analytics did this week, by the way, very, very timely to point out, that it was all around privacy, data sharing, data protection, and Facebook is built on open APIs into a number of different things. And what really matters is how we constrain data, how we shape it, how we keep it private and secure, and how the owners of the data actually manage it. Let's talk about who actually owns the data. It's not the custodian of the data. It's the originator of the data. Let's talk about that for a second. Let's talk about data and how we should be thinking about it in terms of FinTech regulation and bank play. What are some of the things that we should be considering? Rebecca?
The owners of the data are the consumers. That's what I think. And in Mexico has, and many more countries now have very strict regulation towards data protection. So I think that it's very important to know that sharing good information with high standards, protecting the consumer, it's going to be beneficial to all. I think who is generating the data? All the financial sector. Traditional and non-traditional one, and the beneficials of sharing with high standards would be good towards, I mean, talking about Latin America with all the money laundering and fraud problems that we have to construct good data, good ways to manage it and sharing it to prevent and provide better products to the consumer.
So Miguel, let's look at that in terms of what the banks and what you see the companies that you invest in struggle with when they try to partner with the banks in discussing how that data actually should be shaped, shared, authenticated, and actually capitalized on. What are some of the things that you're hearing from the companies you invest in?
Well, being a global fund provides us with a unique perspective on this. We cover Asia, Africa, and Latin America, and in Asia and India in particular, we've seen, an incredible example of what this could look like in an ideal scenario. And I'm talking about the India stack, a combination of 3 layers of technology among payments, IDs, and data storage. So the concept of a digital data locker that captures all the information that is touched upon through these combination of digital ID and financial and tax transactional data is finally in the hands of the consumer, as Rebecca mentioned, who is its rightful owner. This is opening up the possibilities, incredible possibilities for innovation, not without its pitfalls either, because it's already been hacked, as is everything. But there are already improvements envisioned for it, including using distributed ledgers to keep it to keep it even safer. That being one extreme. In another, the European Union, for instance, and its open banking directive actually mandating banks to provide APIs. But as with Mexico, who recently announced its own FinTech law and has mandated this, it's only as good as the enforcement behind it. With Mexico in particular, the announcement has been made, but the details will only emerge over the next year or two as to how that is implemented, how long it will take to require banks to have APIs open to their customers, and how easy it will be to access them, and how free the information that can be accessed through them will be. And unless there's a really strong commitment from the from the regulator to make sure that that is the case, it'll be a lot of hype without much result. But there are alternatives emerging now, and we were discussing this in our preparation call on how this model can perhaps be stood on its head, instead of it being a bank-led issue, which is understandably sensitive. There are some banks that are very enlightened and are collaborating very well with the fintech industry, be it through APIs or their own fintech initiatives, or supporting external fintech asset managers. But there are other entities within the ecosystem that can play a very important role, like the tax authority, for instance.
Well, let's explore that a little bit, because this is what gets interesting. That there, in different geographies, let's just take a couple of those examples, and looking at how policy-led initiatives actually have more teeth, more easily enforced, and actually have more quick adoption. In the UK, the Competition Authority and the Financial Conduct Authority mandated that the bank stack be open. So they issued the first 9 technical requirements in January. All of the high street banks, actually 9 banks in the UK, met that deadline. In the EU, we're looking at fuller technical requirements being delivered again in May and in July. In Singapore, it's actually being driven a lot by the market. And we look at e-commerce players like Alibaba and WeChat and Ant Financial pushing for more open APIs to access financial information to run on their payment schemes. That's actually being looked at very seriously by the regional regulatory authorities, embracing what the market is dictating. And even in Luxembourg, where they're trying to actually be the regulatory stack for the entire European Union, the regulator is actively involved and meeting with financial institutions and emerging technologies daily. There is an open and active dialogue. If that doesn't happen here, and where it's somewhat of a struggle in Mexico, but there is a different authority that actually deals with, or could enforce that, let's talk about that model. Explain a little bit more, Miguel, what you mean by the tax authority actually perhaps maybe making regulation much more interesting and much more viable and opening up the system, and the tax authority being one of those particular policy players.
Sure. Everything is, a part of a broader wheel, but potentially as Latin America adopts full electronic invoicing, their tax authorities will have incredibly rich data on small businesses, sole proprietors, medium businesses, large businesses that can be leveraged for fintechs. So perhaps one avenue of exploration is to have the tax authorities open APIs themselves and ultimately have approval from the end consumer.
Well, there's the interesting part about the richness of the data, right? You mentioned that the tax authority sees all of that transactional data. Banks will see that too. But what I think is really interesting is that there is a lot more data out there once we open APIs that actually rounds out and fleshes out and makes more rich how we understand individual consumers and small businesses and large corporates' actual play in the ecosystem. And this leads me to what ultimately will become what banks are going to be. And you'll hear it here, and I'm going to stick by it. I'll put all my money, the little I have, on it, is identity as a service and identity custodianship. We see transactional data in banks, but what we don't see, and what you do see in terms of crowdfunding and credit ratings, is not just transactional data, but behavioral data, psychrometric data, social sensitivity analysis, potential on all of that. We also have biometric data in the form of how we actually move our own bodies that can authenticate us, and it's a whole dynamic identity. Tax authority may be able to break that open and allow a little bit more if they were to do an open API. or at least prove as an example for that. What are banks missing if they don't actually start to collaborate with fintechs, especially as we move towards a new model of data-driven, value-added services rather than transactional data? Rebecca, what are you seeing in Mexico?
I think, as we mentioned it before, like transactional business is getting smaller, and when we see the richness now is on the data that we provide as an industry, and fintech really have a lot of behavioral data. Not also that, we are continue seeking innovation to provide more products and reach for more information that help us to provide better products to better niche.
But it's also a matter of inclusion. That the traditional product structure that we have in banking is exclusionary. It excludes masses of people that actually could increase the market size tremendously, but also we're missing out on a potential customer pool because it's a rigid, right now it's a traditional and rigid structure in terms of product design.
Sure, and that's something that Miguel mentioned before. It's this inclusion where we need a lot of authorities to have the teeth to I like to say enforce, but invite to banks and other financial institutions and even the same government to provide the incentives to make more data, to put more data, to share more data, to provide better products and reach more competition and financial inclusion, which is where technology want to go towards really serving the consumer or the people.
Well, you mentioned the transactional cost of the loss of revenue. All technology is driving operational costs towards zero. So where is the new revenue stream for banks when, after adopting or actually just looking at efficiencies in terms of their tech stack, all transactional revenue is dropping or is losing marginality? Miguel, when you talk to your fintechs, how do they explain what the future revenue and profitability source is for the banks that they want to partner with? And where are you seeing some of the challenges in terms of them actually getting that adoption on the bank side?
I think one of the great areas of opportunity for fintechs to collaborate is in portfolio sourcing or generation for banks, because on the transactional side, on the technology side, a lot of things are getting commoditized, and some of the things fintechs are more agile and more capable of doing or adopting more quickly. But the banks have the giant balance sheets, and they're aware of the efficiencies that they can obtain by partnering, with fintechs to acquire clients more cheaply, approve them more quickly, retain them more successfully, and keep them more satisfied throughout the customer journey. So we're seeing various examples of that in the region, and in particular in some of our own portfolio companies vis-a-vis the larger domestic banks, the larger regional banks that have presence in Mexico, Brazil, for example.
And if they were to all have equal opportunity or a baseline and a fair playing field in terms of regulation, would this actually allow both banks and the fintech to find new service models, new business models, and deliver better service? Does it come down to actual policy then that allows this collaboration to really be fruitful?
I think so, because there's, right now this conversation we've focused on individual data ownership, but there's a multitude of other dimensions where regulation can play a role in facilitating these efficiency generating partnerships between fintechs and banks. And one of the topics we discussed in our pre-session was cloud data management. Most of the regulators in Latin America do not allow for bank portfolio information to be on the cloud. It has to have a physical server locally, whereas in Europe, for instance, Amazon has convinced the European regulators to give them a pan-European passport, so to speak, that covers licenses in each of the EU countries. And I think that would be a great model to emulate in Latin America, because all of the fintechs that I know of use Amazon Web Service or other types of
Here's
services.
the funny thing about Amazon Web Services. They do a hell of a lot better job in terms of maintaining security and updates, patches, than any institution on their own could do. That's what they do. So the standard of security is actually much higher for AWS than it is for any single bank operating on an on-prem security system. That's an interesting thing to point out, that because regulation allows this, there's a different level of security and containment because policy allows for that. Now, it goes to that sort of thing that here, what would be something you'd like to see happen? I mean, the fact that regulation isn't necessarily as disruptive, maybe, and maybe it actually could be much more disruptive. You talked about sandboxing, and sandboxing is one of the things that they do in the UK incredibly well. They do it in Singapore incredibly well. The US is finally starting to adopt sandboxing. By the way, the US is so far behind in regulation, I can't even begin to talk about how behind they are. But sandboxing is one of those things. What would you want to see here for sandboxing?
I think I like the fact that what we have right now, at least starting in Mexico, and we are starting to see more in other countries, is that we have right now the line, just like the rough law, the general law, and we need to see the specific lines, the fine tune of where this law is going to take in. And that's something that it should, at least in Mexico, the law came 2 weeks ago, and it's going to have 6 more months for the CNBV to provide this law. So what they are doing right now, it's providing or gathering all this information they need from the fintech industry to make this path more common to them. But what we need is commitment from the industry, from the government, from the institutions to make this line for all, and we share, and they understand why fintech had all this information in the cloud, right?
Well, it's interesting because in the UK, the last FCA sandbox cohort includes 5 banks and 5 fintechs. That banks are also showing up to play in a regulatory sandbox. That maybe is an interesting way to encourage a lot more collaboration, is actually having policy that opens itself up to have both sides of the fence play. I mean, is that something that we could possibly see in Latin America anytime soon?
Sandbox, I think sandbox is where real innovation would come more and more, and this it's going to happen with this interaction from all the industry and the commitment, again, from the government. Because understanding technology, understanding the importance of generating better information with new models is not going to be an easy task.
Well, the nice thing about a sandbox is that everyone uses the same clean data set, and we can test the models, we can test the impact to risk, we can test all sorts of things within a very contained place that allows the regulator to review what that risk is and to mitigate the risk. And everything, I mean, the whole reason why fintech really arose is because it was meant to cure or to solve or to at least fix the 2008 financial crisis. And regulation was put in place in order to make sure systemic risk didn't have massive impacts on cap markets. Cap markets are still being, driven by balance sheet portfolios on the retail side. Everything feeds back into that. Now that we understand that we have systemic risk at the scale that we do, it actually comes down to how do we reduce that risk, and how do we do that by opening it up. And competition is supposed to actually reduce risk. So why are we even debating the importance of regulation in making this industry better? Actually, why are we debating regulation as a good thing? Why? I find that it's a rhetorical question, but maybe there's a good reason why we're still having this conversation instead of understanding or adopting more proactive regulation frameworks. I mean, you're shaking your head, Miguel, because I think you're just as confused as I am about why this is still a question we have.
Yeah, I'll leave that very philosophical question to people that are way smarter than me, and I'm just going to continue hammering on the incremental improvements that can be made. You know, we've talked about data ownership. I also wanted to talk a little bit about payment friction and digital adoption. Every one of the countries in this region is making a big to-do about different M-wallet models, and yeah, your M-wallet can be as sexy as you like, but unless there's a real determined effort to allow for ample cash in and cash out networks and competition and free competition there, as opposed to dominant leading banks having mono payment networks, or you're not going to really oil that ecosystem, so to speak. So you need to push that.
But the mobile wallet component, let's talk about that. The licensing for e-wallets, or for an e-license for money, that does spur an enormous amount of competition, and it finds where the payment system actually fails. Yeah. But it also reduces the cost of actual transactions. It can be direct bank to bank. Yeah. It uses tokenization. The token itself has more interesting data around it than the payment does.
Yeah, but we still don't have any examples of interoperable large-scale M-wallet payment platforms in Latin America. BIM in Peru has been touted as an example to emulate. Yes, there was a lot of very good thought going into it with top minds like Bankable Frontier Associates advising, and kudos to the Social Inclusion Ministry and the Banking Association for pulling it all together. But while there's a lot of people signed up to it, very few are actually using it. And so I insist we need to really encourage the factors that promote usage at the street level.
And policy can drive that.
Absolutely.
Even in digital assets like cryptocurrencies and all these kind of things, that in Mexico has like a big discussion about it, but just the incentive to be closer, to see how all these innovations through payments, through currencies really bring costs down and provide with more products and permeate to more parts of the society that don't have access right now. It's just discussing it makes bring to the next level of innovation.
Yeah, I wanted to actually, I forgot to mention it before, but one cool example of a country doing very interesting regulatory innovation is Uruguay. Small country, so maybe easier to do some of these things, but they're promoting agent networks, they're promoting digital payments. They're actually going as far as providing tax breaks on digital transactions. Some other countries are doing that too, but then they're also subsidizing POS devices. So that's a great example of pulling it all together, for me at least.
Well, I think when you mentioned India Stack, that kind of gives us an interesting example of pulling it all together. Government can drive policy, that can drive technology stacks, that can actually drive the new business models. One final thought from both of you on why we should be thinking about regulation now differently before we wrap up. Rebecca, one final thought from you.
I think that we have to see how regulation really could evolve and contribute to better information, to change the way of thinking towards data, towards sharing, towards constructing better, more efficient, low-cost financial industry that will allow people to have better loans and what we expect at the end, better lives.
Miguel, 2 seconds. Give me your tweet.
I think it's all been said, but for us, regulation plays a key role in financial inclusion, and that should be the mission for all the governments in the region. That should be the driving factor. It's a no-brainer.
So, to quickly sum it up, regulation will drive new innovation and business models. It will it will actually improve the evolution of how technology can be used, deployed, and integrated. It improves access to markets. And fundamentally, regulation sets the framework for all of this to happen. So policy is key, and policy should be the first thing we talk about when we sit down and actually have conversation in the ecosystem. Thank you to both of you. And I'm going to leave you now with a very exciting next segment, which is all about the FinTech pitch competitions and the pitch. This is the best stuff, and this is what I get excited about, because how policy frames this out is what they are able to do. So thank you both, and we'll be around if you have other questions for us for the rest of the day. Cheers.
Thank you, Ghela.
Thank you.